Hey everyone, Graham Stephan here, and let's be real. Who doesn't want financial freedom? That point where you're not stressed about bills, you can pursue your passions and maybe even retire early. It's the dream, right? Well, today we're diving deep into a proven path to get there. Real estate. Forget the get-rich-quick schemes. This is about building lasting wealth brick by brick, or should I say, property by property. Whether you're just starting out or already own a home, this video is packed with strategies, tips, and real-life examples to empower you. We'll cover everything from understanding the basics to advanced techniques used by seasoned investors. So if you're ready to unlock the potential of real estate and take control of your financial future, buckle up, smash that like button, and let's get started. Before we jump into the world of real estate, let's define our destination financial freedom. Now, this means different things to different people, but at its core, it's about having options. It's about reaching a point where your passive income, the money you earn without actively working for it, covers your living expenses. Imagine that, your money working harder than you do. This doesn't necessarily mean you'll stop working altogether, though some people choose to. It's about having the freedom to work because you want to, not because you have to. Financial freedom is about breaking free from the paycheck-to-paycheck cycle and having the resources to pursue your passions, spend time with loved ones, and live life on your own terms. All right, let's talk about one of the most popular and reliable real estate investment strategies out there: rental properties. This is the bread and butter for many investors, and for good reason. When you own a rental property, you're essentially becoming a mini landlord. You collect rent from tenants, which ideally covers your mortgage payments, property taxes, and other expenses, leaving you with a tidy profit each month. But it's not just about the monthly cash flow. As you pay down your mortgage, you're building equity in the property, which is like putting money in the bank. And as property values appreciate over time, your net worth grows even further. Rental properties offer a fantastic way to generate passive income, build long-term wealth, and hedge against inflation. It's a win-win-win. Rental properties are like the Honda Civics of real estate investing: reliable, consistent, and they get the job done. When you own a rental property, you're essentially creating a business for yourself. Every month, that rent check comes in, and that, my friends, is the beauty of passive income. Now, I'm not saying it's going to be all sunshine and rainbows. Being a landlord comes with its own set of challenges, from dealing with late-night calls about a leaky faucet to finding good tenants. But with the right systems in place, it can be a fantastic way to build long-term wealth. Think about it. As you collect rent, you're not only covering your mortgage payments, but you're also building equity in an asset that historically appreciates over time. And the best part? You're doing all of this while someone else is essentially paying down your mortgage for you. So, whether it's a single-family home, a duplex, or even a small apartment building, rental properties can be a powerful tool in your quest for financial freedom. Now, if you're looking for a way to live rent-free while building wealth, then buckle up, because house hacking is about to become your new favorite term. It's like the ultimate life hack for real estate investors, allowing you to live for free or at a significantly reduced cost. Imagine this: you buy a duplex, live in one unit, and rent out the other. Your tenant's rent covers your mortgage, and you get to live essentially rent-free. That's the power of house hacking. But house hacking isn't just limited to duplexes. You can house hack a triplex, a fourplex, or even a single-family home with a separate entrance for a rental unit. The key is to find a property that allows you to generate rental income while living on site. Now, I know what you're thinking. Graham, doesn't living with your tenants sound like a recipe for disaster? Well, it doesn't have to be. With proper planning, clear boundaries, and the right tenant screening process, house hacking can be a fantastic way to start your real estate investing journey. Now, let's say you love the idea of investing in real estate, but you'd rather not deal with the hassle of being a landlord. Well, my friends, that's where real estate investment trusts, or REITs for short, come in. REITs are like the low-maintenance alternative to owning physical property. They're companies that own, operate, or finance income-producing real estate, and they trade on major stock exchanges, just like your favorite tech companies. Think of REITs as a way to diversify your portfolio with real estate without the headaches of property management. Instead of buying a whole property, you're buying shares of a company that owns a portfolio of properties, like shopping malls, apartment buildings, or office spaces. The beauty of REITs is that they're required to distribute at least 90% of their taxable income to shareholders in the form of dividends. This means you get to enjoy a steady stream of passive income without lifting a finger. All right, guys, let's talk about flipping houses. This is one of the most exciting and potentially profitable strategies in the real estate world. Imagine taking a property that looks like it's straight out of a time capsule, giving it a modern makeover, and then selling it for a significant profit. It's a process that requires vision, hard work, and a bit of risk-taking, but the rewards can be substantial. This strategy is all about finding those hidden gems, properties that are undervalued because they need a little TLC. These are the homes that have been overlooked by other buyers because they require some work. But for the savvy investor, these properties represent an incredible opportunity. You know, the ones that have been sitting on the market for months because they look like they haven't been updated since the 80s. These homes often have great bones but are in desperate need of a facelift. They might have outdated kitchens, old carpeting, and wallpaper that was last in style decades ago. That's where you come in. As a real estate investor, your job is to see the potential that others have missed. You need to be able to look past the dated decor and see the possibilities. This requires a keen eye and a lot of imagination. You swoop in, buy the property at a discount, give it a much-needed makeover, and then sell it for a sweet profit. The transformation can be truly remarkable. What was once an eyesore can become the most desirable house on the block. It's like taking a diamond in the rough and polishing it up to reveal its true brilliance. The process of renovation can be incredibly satisfying. You get to see the immediate impact of your work and creativity. But, and this is a big but, it's not for the faint of heart. Flipping houses is a challenging endeavor that requires a lot of hard work, patience, and resilience. There will be times when things don't go as planned, and you need to be prepared for that. Flipping houses requires a keen eye for value. You need to be able to spot a property's potential, even when it's buried under layers of outdated wallpaper and shag carpeting. This means having a good understanding of the local real estate market and knowing what buyers are looking for. You need to be able to spot a property's potential even when it's buried under layers of outdated wallpaper and shag carpeting. This means having a good understanding of the local real estate market and knowing what buyers are looking for. You also need to be a master of project management. Renovations can be unpredictable, and you need to be able to stay on top of timelines and budgets to maximize your profits. This means coordinating with contractors, managing schedules, and keeping a close eye on expenses. Renovations can be unpredictable, and you need to be able to stay on top of timelines and budgets to maximize your profits. This means coordinating with contractors, managing schedules, and keeping a close eye on expenses. But hey, if you're up for the challenge, flipping houses can be incredibly lucrative. The satisfaction of transforming a property and the financial rewards that come with it can make all the hard work worth it. So, if you're ready to roll up your sleeves and get to work, the world of house flipping is waiting for you. All right, so you're ready to dive into the exciting world of real estate investing? That's awesome! But before you start throwing around down payments, let's lay down a solid foundation for success. This isn't a get-rich-quick scheme. It's about building long-term wealth. First things first, education is key. You wouldn't jump into a swimming pool without knowing how to swim, right? The same goes for real estate. There are tons of resources available. Books, online courses, workshops, podcasts, you name it. Take the time to learn the fundamentals of real estate investing, different investment strategies, market analysis, financing options, and legal aspects. The more you know, the more confident and prepared you'll be. All right, let's talk about the most important investment you can make: investing in yourself. In the world of real estate, knowledge is power. The more you learn, the better equipped you'll be to make smart decisions, avoid costly mistakes, and maximize your returns. Think of it this way: Every hour you spend educating yourself about real estate is an hour you're investing in your financial future. It's like compound interest for your brain. The knowledge you gain today will continue to pay dividends for years to come. So how do you get started? The good news is there are tons of resources available for aspiring real estate investors. We're talking books, online courses, podcasts, seminars, workshops, mentorship programs, you name it. All right, guys, before you even think about diving headfirst into real estate, you need to have your financial ducks in a row. This means taking a comprehensive look at your current financial situation and making sure you have a solid foundation to build upon. Real estate can be a lucrative investment, but it requires careful planning and preparation. You can't just jump in without knowing where you stand financially. This isn't some get-rich-quick scheme. It's about building long-term wealth, and that starts with knowing your numbers. You need to understand your income, expenses, debts, and assets. This will give you a clear picture of your financial health and help you make informed decisions. It's important to be realistic and honest with yourself about your financial situation. First things first, pull up your credit report. Your credit report is a detailed record of your credit history, including your credit accounts, payment history, and any outstanding debts. It's important to review your credit report regularly to ensure there are no errors or discrepancies. You can get a free copy of your credit report from each of the 3 major credit bureaus once a year. Your credit score is like your financial GPA, and landlords and lenders are going to be checking. A high credit score indicates that you are a responsible borrower and can be trusted to repay your debts. On the other hand, a low credit score can make it difficult to qualify for loans and may result in higher interest rates. Aim for a score of 700 or higher to qualify for the best rates and deals. Aim for a score of 700 or higher to qualify for the best rates and deals. If your score is lower, don't worry. There are ways to improve it. Start by paying your bills on time, reducing your debt, and avoiding new credit inquiries. It may take some time, but with consistent effort, you can improve your credit score. If your score is lower, don't worry. There are ways to improve it. You can start by paying down high-interest debt, disputing any errors on your credit report, and keeping your credit card balances low. Additionally, consider setting up automatic payments to ensure you never miss a due date. Remember, improving your credit score is a marathon, not a sprint. Just remember, this is going to take some time and effort. It's important to be patient and stay committed to your financial goals. Consistency is key, and over time, you'll see the results of your hard work. Don't get discouraged if you don't see immediate improvements. Keep pushing forward and stay focused on your long-term objectives. Next up, create a detailed budget. A budget is a financial plan that outlines your income and expenses. It helps you track your spending, save money, and achieve your financial goals. Start by listing all your sources of income and then categorize your expenses. Be sure to include fixed expenses like rent or mortgage payments, utilities and insurance, as well as variable expenses like groceries, entertainment, and dining out. Track your income and expenses meticulously so you can see exactly where your money is going. This will help you identify areas where you can cut back and save more. Use financial software or apps to make tracking easier and more efficient. Regularly review your budget to ensure you are staying on track and making progress towards your financial goals. You need to know how much you can realistically afford to invest each month without putting yourself in a financial bind. It's important to strike a balance between saving for the future and enjoying your life now. Be realistic about your financial capabilities and avoid overextending yourself. Remember, slow and steady wins the race. Remember, real estate investing requires capital, so the more you can save and invest, the faster you'll reach your goals. Consider setting up a separate savings account specifically for your real estate investments. Automate your savings by setting up regular transfers from your checking account to your savings account. This will help you build your investment fund without even thinking about it. Cut back on unnecessary expenses. Take a close look at your spending habits and identify areas where you can cut back. This might mean dining out less, canceling unused subscriptions, or finding more affordable alternatives for your regular expenses. Every little bit helps, and the money you save can be redirected towards your real estate investment fund. Find ways to increase your income. This could mean taking on a side job, freelancing, or finding ways to monetize your hobbies and skills. The extra income can be a game changer in helping you reach your financial goals faster. Be creative and explore different opportunities to boost your earnings, and make saving a non-negotiable part of your routine. Treat your savings like any other bill that must be paid each month. Set up automatic transfers to your savings account to ensure you are consistently putting money aside. Over time, these savings will add up and provide you with the capital you need to invest in real estate. Once you have a solid financial foundation, start exploring different investment options. Real estate is just one of many ways to build wealth. Consider diversifying your investments to spread risk and maximize returns. Consult with a financial advisor to develop a comprehensive investment strategy that aligns with your goals and risk tolerance. Educate yourself about real estate investing. Attend seminars, read books, and follow industry experts to gain a deeper understanding of the market. The more knowledge you have, the better equipped you'll be to make informed investment decisions. Stay up to date with market trends and continuously seek opportunities to expand your knowledge. Network with other real estate investors. Join local investment groups, attend networking events, and connect with experienced investors. Building a strong network can provide valuable insights, support, and potential investment opportunities. Don't be afraid to ask questions and learn from others' experiences. Analyze potential real estate deals carefully. Look at the numbers, consider the location, and evaluate the potential return on investment. Don't rush into a deal without doing your due diligence. Take your time to research and analyze each opportunity to ensure it aligns with your investment strategy and financial goals. With careful planning and preparation, you can achieve success in real estate investing. Stay focused, be patient, and keep working towards your financial goals. Remember, the journey to financial freedom is a marathon, not a sprint. Stay committed, keep learning, and enjoy the process. All right, let's talk about one of the most crucial aspects of successful real estate investing: market research. And it all starts with understanding the golden rule: location, location, location. You see, the location of your investment property can make or break your success. A great property in a bad location is a recipe for disaster, while a mediocre property in a fantastic location can still be a lucrative investment. But how do you determine a good location? Well, there are several factors to consider, including population growth, job market, crime rates, school districts, proximity to amenities, and overall desirability. Look for areas experiencing economic growth, job creation, and a steady influx of new residents. These factors typically drive up demand for housing, leading to higher rental income and property appreciation. Remember, you're not just buying a property, you're buying into a neighborhood and its future potential. Okay, so you've got your finances in order, you've done your market research. Now it's time to start building your real estate dream team. And the first key player you'll want on your side is a rockstar real estate agent. Now, I know what you're thinking. Can't I just find properties myself online? Sure, you can browse listings, but a good agent brings so much more to the table. They have their finger on the pulse of the market, know about properties before they even hit the MLS, and can help you negotiate the best possible price. But it's crucial to find an agent who specializes in investment properties, particularly in the specific niche you're interested in. You don't want someone who just dabbles in rentals or flips. You want an expert who understands the ins and outs of your chosen strategy. Remember, your agent is your advocate, your advisor, and your guide through the complex world of real estate transactions. They can save you time, money, and a whole lot of headaches. So choose wisely. Now, let's be real for a second. Investing in real estate isn't always sunshine and rainbows. It's not like you just buy a property and watch the money magically roll in, you know? There are going to be challenges along the way, unexpected bumps in the road, but that's true for any worthwhile endeavor, right? The key is to be prepared, to anticipate those challenges, and have strategies in place to overcome them. That's what separates the successful investors from those who give up at the first sign of trouble. Let's face it, folks, real estate investing isn't for the faint of heart. It comes with its fair share of risks. But here's the thing. Successful investors, they don't shy away from risk. They embrace it, they understand it, and most importantly, they manage it effectively. Think of it like this. Every investment has the potential for both profit and loss. The key is to minimize your downside while maximizing your upside. That's what risk management is all about. It's about protecting yourself from the unexpected while still positioning yourself for growth. Let's be real, folks. Financing is the lifeblood of real estate investing. It's how most of us get started and scale our portfolios. But let me tell you, navigating the world of mortgages, loans, and interest rates can feel like navigating a minefield. One minute you think you found the perfect deal, the next minute you're drowning in paperwork and closing costs. But don't worry, I'm here to guide you through it. Okay, so you've got a couple of rental properties. You're starting to build that passive income stream. Sounds amazing, right? But here's the thing, guys. Real estate can be a huge time suck if you're not careful. Remember those late-night calls from tenants about a leaky faucet? Yeah, those can really eat into your Netflix binge time. Now imagine dealing with multiple properties and multiple tenants. Suddenly, you're spending your weekends fixing toilets instead of hitting the beach. Not exactly the picture of financial freedom, is it? That's why understanding the time commitment involved in real estate investing is crucial. You know, one of the most common questions I get is, Graham, is it really possible to achieve financial freedom through real estate? And my answer is always a resounding yes. But hey, don't just take my word for it. Let me introduce you to Matt, an average guy who used real estate to ditch his 9-to-5 and build a life most people only dream of. Matt's story is proof that you don't need a trust fund or a fancy degree to succeed in real estate. All you need is a solid plan, the right mindset, and a whole lot of hustle. Alright, by now you're probably fired up and ready to dive headfirst into the real estate game. And that's awesome, but hold your horses for a second. One of the biggest mistakes new investors make is trying to do too much too soon. They get caught up in the hype, overextend themselves financially, and end up overwhelmed and discouraged. Remember, Rome wasn't built in a day. Start small, learn the ropes, and gradually scale up your investments as you gain experience and confidence. Alright, so you're ready to jump into the exciting world of real estate and start building that financial freedom we've been talking about. It's an exhilarating feeling, isn't it? The thought of owning properties, generating passive income, and watching your investments grow over time. But before you get too carried away, let's take a moment to ground ourselves and talk about the importance of strategy in this venture. That's awesome. But hold your horses for a second. We need to talk strategy. You see, diving into real estate without a solid plan is like setting sail without a map. You might get somewhere, but chances are you'll encounter rough waters and unexpected obstacles along the way. So let's chart a course that will help you navigate these waters with confidence. You see, I'm all about aggressive investing, but even I know that diving headfirst into the deep end without learning to swim is a recipe for disaster. It's tempting to go all in, especially when you hear success stories of people making it big in real estate. But remember, those stories often gloss over the years of hard work, learning, and sometimes even failures that preceded the success. That's why, in this chapter, we're talking about why starting small is not just a good idea, it's crucial, especially when you're just beginning your real estate investing journey. Starting small allows you to test the waters, understand the market, and learn the ropes without putting everything on the line. It's like taking baby steps before you start running a marathon. Think of it like this: every expert was once a beginner. No one is born with the knowledge of how to invest in real estate. It's a skill that you develop over time through education, experience, and sometimes trial and error. By starting small, you give yourself the opportunity to grow and learn at a manageable pace. Nobody starts off as a real estate mogul overnight. The people you see at the top of the game have likely spent years, if not decades, honing their craft, making strategic decisions, and learning from their mistakes. They didn't achieve success by taking reckless risks. They did it by making calculated moves and building their portfolio gradually. It takes time, patience, and a whole lot of learning from your experiences. Each property you invest in, each deal you negotiate, and each tenant you manage teaches you something new. These lessons are invaluable and will serve as the foundation for your future success in real estate. And that's exactly why starting small is so powerful. It gives you the chance to make mistakes, and learn from them without catastrophic consequences. When you're dealing with smaller investments, the stakes are lower, and the impact of any missteps is more manageable. It allows you to gain that invaluable experience without putting your entire financial future on the line. Think of it as a training ground where you can build your skills, develop your strategies, and gain confidence in your abilities. As you become more comfortable and knowledgeable, you can gradually take on bigger and more complex projects. You're essentially dipping your toes in the real estate waters, getting a feel for the temperature, the currents, before you cannonball into the deep end. This approach allows you to assess the market conditions, understand the dynamics of property management, and get a sense of what it takes to be a successful real estate investor. Remember, real estate investing isn't a get-rich-quick scheme. It's a long-term commitment that requires careful planning, strategic thinking, and a willingness to learn and adapt. The market can be unpredictable, and there will be ups and downs along the way. But with a solid foundation and a thoughtful approach, you can navigate these challenges and come out ahead. It's a long-term game, and like any good game, you need to learn the rules, develop your skills, and slowly level up. Think of it as a game of chess, where each move needs to be carefully considered and strategically planned. Rushing into decisions without thinking them through can lead to costly mistakes. Starting small gives you the space to do just that, to make mistakes, learn from them, and refine your strategies without risking it all. It's about building a strong foundation that will support your growth and success in the long run. So take your time, start small, and gradually build your way up. The journey may be long, but the rewards are well worth the effort. Guys, the real estate market is like a constantly shifting landscape. What worked yesterday might not work tomorrow, and what's hot today could be ice cold next year. This isn't like putting your money in a savings account and forgetting about it. You've probably heard the saying, "It's not what you know, it's who you know." Well, in the real estate game, that couldn't be more true. Building a strong network can make all the difference in your success. Think about it. Who's going to tell you about that off-market property before it hits the MLS? Who can connect you with the best contractors and property managers in town? Chances are it's going to be someone you've built a relationship with. We've covered a lot of ground in this video, from understanding financial freedom to exploring various real estate investment strategies and tackling potential challenges. Now, it's time to take action and start building the future you deserve. Remember, financial freedom through real estate isn't a pipe dream. It's a very real possibility for anyone willing to put in the work. It's about taking control of your finances, building lasting wealth, and designing a life on your own terms. If you would like to know more, please reach out to Pacific Bruce by calling 702-277-1303 or writing to lasvegasbruce@gmail.com. Also, please be sure to like, subscribe, and share this video.